In this video, learn the Monster Trader Review.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how a junior trader lays out his plan to become a monster trader at our trading firm so you learn how to grow your trading account. Let's get to work.
Overall play is a backside short, and the specific pattern for me is the shoot the gap pattern, and that's just what I call it. It's not a trading term. It's just how I categorize the trade. And if for those of you guys who are in attendance for my daily review process and my weekly review process meetings with you guys, I went over an exercise. We briefly touched on that exercise that can really help with making bigger trades and hitting your goal. And so this playbook is sort of revolved around that exercise.
And Garrett, you and I had talked about this. So for those of you who are not familiar with this, you have been very consistent as a trader, very consistently profitable, particularly over the last 5 months. And you and I had talked about how you go from being super consistent to being able to size up, but also continue being very consistent. Is it fair to say you've been very consistent as a trader and you've reached that point where you are a consistently profitable trader?
Yes.
And is it fair to say now the challenge is how do I take that and get to a next level which requires you to trade bigger? Is that fair to say?
Yeah, absolutely.
Okay, and so we had a conversation on the phone about, just filling people in, we had a conversation on the phone about a potential exercise to go ahead and do that. And so you and I talked about this exercise, and what we're going to share here is that exercise which can help people who are consistently profitable to get bigger. It can also help people who want to get bigger in their best trades. And so why don't you walk us through that particular exercise and maybe how it helps you or maybe doesn't help you.
The exercise is a reverse engineer process. So, you pick a goal, you have a record trade in mind, you have a next step in mind, right? So whatever that is for you, you can pick a number. And then you identify the best trades for you throughout the day, throughout the week, anything that you think you can make that goal in. So, it could be something you didn't trade, it could be something that you traded. And then you review it in a way where you reverse engineer it in order to hit that goal. And you want to be very specific about trade entries, sizing, stops, where you're trading new positions against, and through that experience, I've found it tremendously helpful because not only are you getting a rep, perhaps trading something bigger, but you're also getting a rep of acting on these inflection points that are all the key executions throughout the course of this trade for you. And so you see time and again every time you do this that it doesn't necessarily take that much more in order to make X amount. It might seem like a lot more, but really a lot of it has to do with trading it correctly, hitting those key inflections. And so I think not only does this exercise help make you a bigger trader, but I think it makes you a better trader. I think it helps you more clearly define your mechanics and your process for any given trade.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This was a trade that, not only did I review a trade and reverse engineer it that was very similar to this, probably about a week beforehand, that I was able to recall during this trade, but also I came, extremely close to hitting my goal in this trade, and then reviewed it afterwards, and found that a way to make, that much more in it.
I think the key right there is the being specific. So you're taking a trade for which you have edge, where you have edge, where you've succeeded, and you're reverse engineering it, and then you're being specific about where you, within your system, could have been bigger on entry, exactly where you could have entered bigger, what your stop would have been for if you were wrong, specifically, what your target would have been for if you were right, the exact setup that you would have taken. So this is not like, I'd really like to make $5,000 in a day. And I think for your goal, we wanted to have a $3,000 to $4,000 trade, correct?
Yep.
So this is not like, hey, I'd really like to make $4,000 in a day. Wouldn't that be really great? I think I'm really going to make $4,000 on Monday. I really think I'm going to do that. I'm going to, in my head, think about doing that. I really want to do that. Those types of thoughts are well-intentioned, but what you're doing here is you're being specific about how you are going to get to the next level with your trading. You're not even actually doing anything. You're not doing that much different. You're not doing something pie in the sky. We'd all like to make more money. Okay, and for some of us, those numbers are different. We'd all like to make more money. But there's got to be that realistic way that you're going about getting bigger. We all want to trade bigger. I think that's best, and Dr. Steenbarg and I talk a lot about this. Sizing and trading bigger really is a goal to start focusing on after you've been consistent like Garrett has been. He's been consistent. Terrific. Ahead of 99.5% of all traders. Terrific. Outstanding. But wants to make more. And then there's a way to go about doing this. And so this is reality-based. This is not wishing. This is taking what you're doing well and showing yourself how to do it a little bit better. And so I didn't mean to cut you off there. What's your overall thought process on how this might help you with your trading?
Well, as you were describing being specific, I just think that one of the consequences of that is that when the trade comes around, you trade it with much more intention because you've put the time in to go through these reps. And so the trade's sitting there in front of you and you're staring at it and you're watching the tape and you're seeing these points. And it just becomes much more clear at certain points, well, this is what I'm supposed to do here if I want to reach my goal. I've been practicing this. And trading's a funny thing because the market's open for certain hours during the day and you're trading, right? Whereas like if you're a basketball player, there's a game and then you've got like 23 other hours in the day to go out backyard and like shoot hoops and practice your jump shot and do dribbling drills and all that kind of stuff. So when everyone else is sleeping, you can get better. with trading, I think you have to be really creative in order to find ways to do that. And I think this is just a great way to do that, because when I traded this, during certain points in the trade, I just felt like I felt more clear-headed, and I felt like I was trading it with much more intention.
We've seen in our work, so this is an exercise that we've suggested to other traders, and it really helped them. So when I made the suggestion to you, I wasn't just making it up on the spot. We've really done this in the past. It's really worked. That's why we're suggesting it to you. What we've seen is that right now you've had a lot of practice thinking of yourself as a consistently profitable trader and doing a tremendous job becoming a consistently profitable trader. You know, fist bump to you, standing ovation to you. And you've been walking around the halls of S&B thinking of yourself as a consistently profitable trader, preparing each day to be a consistently profitable trader. Now, we have to prepare differently. Now, we've got to think of ourselves differently. And what this exercise helps you to do is it helps you to think like a monster trader. It helps you to think like a big trader. You're fishing, hunting, gaming for that big trade for you. You're preparing to hunt that big trade. You're reviewing for that big trade. You're expecting to catch that monster trade, that big trade. So it's not just your mindset's different, which is significant, but your work's different. Your preparation work's different, your review work's different, your expectations are different. And you start to live the thoughts and the trades of a big trader. And inevitably, since you are consistently profitable, you're going to become that. We're starting from a really strong base. You're a consistently profitable trader. You've got great traders around you at a prop firm. You've got great ideas around you at a proprietary trading firm. You see a lot of guys make a lot of money. You're on a great team. This is a matter of time before we're going to get to that next step. So it's doing all that. I'm seeing it's doing all that for you. All right, let's jump into a specific example of this exercise, if you would.
So this is GNUS. I'm just going to give a little background leading up to this trade here, the 1 month big picture. So GNUS traded from 30 cents to $10 in 1 month. So that's the first key piece of information. And then, you know, in the last 2 days, it traded from $2.80 to $10. So this is a parabolic stock. A month ago, on May 6th, it announced to launch Cartoon Channel, which is a new channel for them, digital network across Amazon Prime, Apple TV, Comcast, etc. And so this was the news that popped it off. So, you know, it had a move on that day. It had some volume. You know, this was the initial catalyst. But this really was only the beginning of the story of the price action. So the next day they announced a direct offering, 8 million shares at 35 cents a share. It's 20% of the market cap. And then it holds higher the following day. May 18th, they do another offering, and it holds again. May 28th, they file to sell 20 million shares at 150. Each one of these offerings is getting at a higher price. It tanked on that day, and then it recovered the following day, held higher, and then 2 days later, it took out that high that it made on the 28th before it tanked at 280, and then it took 2 days to squeeze to $10 in the after hours. So that's sort of the evolution of what happened to GNUS. So the intraday big picture was that on the previous day, GNUS gapped up after what looked like could be exhaustion. So it had a lot of the traits of this setup, but the tape was trapping and clearly was not ready. And it traded from 4 to 8 on that day. I took some paper cuts on that day, and then realized that the tape just wasn't ready. I had been long in the after hours the day before, and you could tell by watching the tape that someone was stuck or someone was manipulating. So this continued on in that trading day, and it traded 400 million shares on that day, which was just ridiculous float rotation. And for anyone not familiar with that, that just means that it's trading multiples of its float in one day. And so it's just turning over shares. You know, at each new level, there are probably new shorts coming in. And so, you know, price sometimes gets extremely irrational on these types of days because it just has more to do with the people trading it in the share structure than anything else. So on the day of the trade, there was another gap up above 8, and so this became even more interesting for a shoot the gap play. And so that's a pattern that I'll talk about in a second. And so the idea behind this is that when this buyer turns off, you know, whatever that is, whatever's driving it up, exceptional momentum should deflate. So it's had so much momentum on the way up that that momentum should come out and create the opposite reaction. So on the day of the trade, near the open, Citron came out with cautious comments, which was not really a surprise, with a $1 target. And GNUS bounced a little bit, which again is not another non-surprise, because a lot of times when Citron comes out on these things, it doesn't necessarily mean the stock is going to go down at all, and it doesn't necessarily mean the stock's going to go down right away. There are a few different scenarios that can play out when Citron comes out with cautious comments. And then at 10 a.m., GNUS announced filing of an S3 to offer 60 million shares at $2 a share. And again, like it's done a lot of offerings so far, so again, it doesn't necessarily have to go down on this news. It could be the catalyst, but you know, for me, when these types of things happen, it just means I really want to be watching the tape. You know, it doesn't mean I have a preconceived notion about what it's going to do. It just means this is a serious area of interest and a time that I should be focusing on the stock, because this could be it. And in this case it was when that offering came out. So the ATR is $1.24, and this has just been increasing every day, obviously with the range. Average daily volume, same thing, it's 28 million, but it's increasing every day. Like I said, it did 400 million on that previous day. The RVOL was around 10 on this day, and the short float says 3.5%, but again, you know, when it's doing 400 million shares and you've got a lot of intraday traders in it, that number can be inaccurate. And the float, 88 million. The backside short play, which I touched on, the idea here is that I want to be catching the unwind after a parabolic move on the higher time frame. So when that momentum comes out, it's like the rubber band snaps back. Sometimes this takes a catalyst, sometimes it doesn't. And I have a playbook of these backside short patterns that help me time this trade. So the shoot the gap pattern, this was the particular form that this came in on this day. And so what I look for with the shoot the gap pattern is a parabolic move on the daily chart plus a super green candle on increased volume takes it to new highs. So we basically have a daily green candle that's bigger than all the others. And then we have a gap up the following morning. And then preferably a morning ramp through those pre-market highs. And this is a pattern we saw on Apron in March. We saw it with Beyond earlier this year. And you'll see it often with these parabolic stocks, especially when they have very big moves on the daily chart. So my objective here is to identify a level in the morning that it can't trade above, and then look for weakness on the tape in this opening range and spot an inflection point for potential morning unwinds. The idea is that the rubber band is so stretched at this point that any kind of crack in the morning session could create the unwind, in which case it will probably happen very fast and has the potential of a big move. You know, and if it holds all morning and into the afternoon, it starts to change. You know, the way that I attack it will start to change. So the key points for this type of setup for me is that, you know, FOMO can be palpable because at this point there's a lot of opportunity. You tend to not want to miss it, and so it's very easy to get in front of it. It's very easy to get squeezed and, you know, lose a bunch before it's ready, frankly. And you have to be willing to draw down, but you don't want to. You want to try not to have FOMO dictate how you're going to trade this. And so the way for me to do that is to have mechanics and procedures in place to manage this. So you want to manage the risk on the front side. Visualize what you might see that tells you the moment is now. And this is really big for me, and this exercise is, I mean, that's what this is all about. It's like identifying these moments, the moments where you can add size, the moments where you might be able to trade it against a tighter stop, the moment when you have the timing right and the edge increases in the trade. And those moments are really what you want to be able to identify with this trade in order to get more size. And so for me, I like to visualize what that might look like. And so, you know, this exercise helps with that visualization because it forces you to do that with other instances. And often these trades trigger minutes, hours, days later than you think, but happen fast when they happen. So again, you can't really predict when it will happen, and that's why you have to manage the FOMO. And a lot of times it's later than you think. Like this one happened a day later than I thought it would. And then I would just say watch the tape, because for me, I just find a lot of edge in the tape when everything else is a big question mark. The tape for me is usually the first thing that will start giving me more clarity as to the timing of the trade. This is the weekly chart, just zoomed out to 5 years, just to give everyone an idea of the move that this thing had, and the volume. Like you can see, the volume, it's more volume than the stock's ever done in its lifetime, a lot more volume. Here's the daily chart, the 3-month. And so, you know, we had this big day right here, and then we had a large gap up, and this green candle here is the day where it did 400 million shares. And I did think at the open that there was potential for this day to be a day where we had a big down move. But then it needed one more day, and it actually turned into a much bigger opportunity. And then you can see it just had a huge gap on the day that it came off, traded to almost 12, and then tanked down to almost 4. So here's the 30-day picture, and this is just a little outline of the evolution here. So this breakout here was the Cartoon Network news, and then they did an offering, and then you can see it just held this 50-cent level for like a week, and then started moving higher, started holding over 120. It did an offering, continued to hold 120 for a couple weeks, broke out at 180, had a pretty parabolic move on this day, and then announced the offering, and it tanked, and again held 180, started creeping up, and then broke out at 280, which started the 2-day move. So this is the 1 week, so you can see the 280 breakout right here, and this day right here was the day where I noticed it was trapping all day, and I did get long for a move into the close and in the after hours on this day. And that gave me a lot of information because I was watching the tape in the after hours and all day, and I could just, you could just tell that there was something going on, like someone was stuck or someone was manipulating it, just because, you know, every time there was a dip that looked like maybe it should be the turn, it would just get absorbed and pretty much trap anyone who probably hit that bid, and then it would just start drifting higher. And so the day before the trade, this is the day that it did 400 million shares. Same thing, just trapping all day. Failures, things that looked like failures got absorbed and moved higher. And then we have the large gap in the morning ramp from the day of the trade. So here's the intraday picture. So you can just see the morning ramp, and then we kind of have this opening range above VWAP where, you know, we had the Citron comments, the squeeze, the S3 offering announcement, and then this moment here where it, for the first time, just couldn't trade above 1050, couldn't lift the offers, and to me that was really like a great moment on the tape. And then it halted, limit down 5 times. So here's the morning on a 1 minute chart. Again, I just want to reiterate that after watching GNUS trap for 2 days, I want to be asking myself, is this different? What do I need to see for this to be different? Because it isn't just a failure, like a quick failure or something like that, that's going to tell me that the trade is on, because it's been doing that for 2 days. It's been doing that and then trapping. So, you know, how do we know, you know, and what are the things that we can look at to identify if this is different this time? So we halt, limit down, and this was the first sign of weakness, and Citron comes out with cautionary comments, and it bounces. So this is sort of a moment where I'm asking myself, you know, is this just a recipe for another squeeze? Is this going to have to squeeze higher, or, you know, at some point is this going to get heavy? And so you can see this area here where it started to trade sideways, and again I'm asking myself, like, is this heavy? Is this going to fail from here, or is this going to consolidate and actually squeeze higher? I thought both things could happen. And then right here they came out with the offering, the S3 announcement, and it failed from this 11. And that was sort of, you know, when you get that again and it's a lower high, I got a lot more confirmation here. I started to get a lot more confident that this could be it. And then when it consolidates under 1050 and can't lift, you know, that was the moment for me. You know, that was where I said to myself, this is different. You know, and if it isn't, I can control my risk here. You know, if I'm wrong, I can hit out. But it can't bounce. It's having trouble bouncing. And the other thing I was saying to myself is if it takes out 960 and fails from this level and has a really hard down move, it might not see that price again. And so, you know, all of that combined starts to give me a lot more confidence that this is a really good trade.
Garrett, did you think about hitting this right away when the S3 came out?
Yeah, I actually did. And I'll describe that in the next slide, but I did. I hit some. I had actually been short, and then I kind of hit out on this move. I got squeezed a little bit, and then I hit back in as soon as that came out. And I was hitting into feelers, and then I kept adding, basically. So, you know, I hit as soon as the announcement came out, asking myself, is this a recipe for another trap? But I need to be involved here. And then, you know, the tape was a little soft. Like, you know, what I'm looking for is I'll hit it after the announcement, and then I want to make sure that they can't lift the offers, and I want to see more bids drop. And if that happens, I'm going to hit more. And so, like I said earlier, the tape is really going to give me the information. And so I hit it a couple times on this candle, and then it was in this consolidation, once I saw that it couldn't trade above 1050, that I actually got most of the size that I had in the trade. So this is the execution just written out the way that I reviewed this trade. So we're kind of going over this in real time here, so I'm not sure I have to read all this out loud. But the key is just that I'm being really specific here. You know, I'm talking about, for instance, I added on Citron and hit out of my ads on this pop. At 11, it couldn't trade higher. Fast forward to added 250 shares at 1080 against 1130, risking 150 for a feeler. Dropped 1070 on the S3 announcement. There was a slight lift in volume. So I'm asking myself, is this different? I add another 250 at 1050 on principle because I'm not risking enough yet. And then I still see the offers can't lift. And so now I'm thinking, you know, this is 500 shares against 1040. It pauses. So I'm figuring out how to get more and more size in this trade as the tape is telling me that I can.
So what this is you proving to yourself, if I'm not mistaken, that this can be a trade where you hit that goal that you're shooting for right now.
Yes.
So you're going back through the trade within your trading system on the trade that you made, and you're realistically showing to yourself that you could have made quite a bit more. And this is giving you confidence that in the same trade that you were in, with the same trading system that you have, that your results for you at this present moment could have hit your goals. And I think that gets you to show yourself, prove to yourself. I mean, how do you argue with that? It's right there in front of you in a trade that you took, what the results could have been. At the stage you are now as a trader, because you're going to get better as you go along. It's not like we're asking you to come up with some exotic options hedge strategy for this. These are all the things you're doing, all the stuff you're watching, all the trades you're taking. Just you make a couple of changes and you can get there.
And the really interesting part about that is that all of the executions outlined here are executions that I took. So there's not even anything in here that I really didn't do. It was just a few moments where I could have gotten a little more size a little earlier. I would have made a couple more $1,000s on the trade just by doing that. And the only way to realize that is to lay this out, is to outline it, I think, because I think it's easy to think that, well, I need to do a lot different to make a few more $1,000s, or I need to, be a lot bigger. And there wasn't a huge difference in my execution between, making a couple more $1,000s in the trade. So that just taught me that paying attention to detail is important, and those little things matter. Like if you can get a little bit more size at a little bit better price, which puts you in a better position to maybe add more later, stuff like that, that can make all the difference.
And I know one of the things that we talked about was you wanted to trade bigger without sacrificing your consistency. And this is, when you're laying this out, this is not you sacrificing any of your consistency either.
Yeah, and one of the things that I've been talking about with Dr. S are just those moments in the trade where it's almost like a separate trade. It's the same trade idea, but you get another chance to add another piece against a different stop with a different risk reward. And realizing that, doing it, and seeing it that way. And in that way, a lot of the times you're not even necessarily risking more. You know, you might have a chance to make 3 times as much, but you might only be risking a third more than you planned on or something. You know, so I think that those moments are really big for me in terms of, you know, where my mind's at now and what I'm studying in these trades. And so, you know, with this trade, you know, for me it all started with the S3 announcement. And I just started getting some feelers because I wanted to see the tape not trap. But I knew I wanted to get bigger. So the more that it didn't trap and the more that the offers couldn't lift and the heavier it seemed, the more size I got. And I mean, I think that like when you can recognize a moment like this where it's holding below 1050 and that's different and they can't lift it, and you can taste it. You're like, I know, like if 950 drops, if it breaks down from here, this could be it. And you start to realize that. And like to me, like those are those moments as a trader where, I mean, you can get really excited. It's like when the day's over, you have to be thankful for those moments too, because it's like they don't happen all the time. But I mean, that's just, I love that. And so, I'm trying to study how to take more advantage of that moment, you know, because I'm already good at getting involved in the right spots. I'm already good at, you know, swinging things against, you know, appropriate prices. But when you have a chance to add against a tighter stop and really, really hammer the moment, like to me, that's it. That's like a big part of it. So for me, that was right here.
100%. You're using the word taste. Lots of people use the word feel. You're watching a stock for multiple days. You get a sense it's overbought. You see a pattern you like. It starts to work for you. You feel that this is a big moment. You feel that you're right. You feel that this is a trade you can make a lot of money in. And then your thinking has to switch. And the thinking is, how do I put on enough risk? Lots of times when we're trading, when you get that feeling, it's super important to make sure you have on enough risk. Lots of times we're trading, and what we're doing is we're very cognizant of our risk versus our reward. But when you feel that you're catching a big trade, when you feel that this is the moment, when you feel that this is going to be a huge winner, you've got to switch your focus. You've got to be hyper focused to, do I have enough risk on? How do I get enough risk on? How do I get enough risk on for my system? How do I add? Where do I add? Where do I put it? How am I going to get into this? Like you were thinking. That's your focus. It's a different focus than how you normally are thinking about. Lots of times you really are thinking more about the overall risk and protecting it. You shift in these moments. And the risk is you don't put on your full risk. It's a different mindset at that point. The risk is you don't have enough risk on when you feel it for a big trade.
And I highlight here the last chance to add for me. This is what I thought I considered to be the last chance to add, which I think is also important, because if you're in that mindset, I think you kind of want to be aware of when you might have the last chance to add, just because that's your last chance. And what happened was it halted down on this candle, and then it opened up, and so now we have a breakdown from here, two halts in a row. And so we're getting a lot of confirmation here, and so when it opens up from the halt, if it can't trade higher, to me, there's enough meat on the bone where I can add some. And if it's at a much different price, it doesn't mean I need to double my size or anything, but I can add some, and I did add some there. And so it opened up from the hull, it lifted a little bit, and then you could kind of see it get whacked down, and then that was it. I added some there, and then after that I'm kind of in covering mode, and I want to switch to thinking about how I'm going to cover this, because this can go pretty far and I don't want to underestimate it, but at the same time I want to be aware and I want to be sharp for opportunities to cover, and I don't want to obviously overstay and let a great trade kind of come all the way back. So I do want to pay myself, but I want to be patient with it. And so one of the ways that I do that is I just cover a little bit at certain places, which kind of helps pace me. It helps me sort of identify those moments where it might be good to cover, but it also helps me not, get rid of the whole thing too quickly. So what I was doing here was I was covering a little bit into each halt, or rather when it opens up from a previous halt and flushes down, just covering a little bit each time it does that. And what I had in mind here was very similar to the apron trade that I reviewed and did this exercise with a week earlier. And this was a trade from March that I kind of just went back to because I just had an intuition that we'd see a similar thing. I didn't think it was going to be this similar. But I wanted to review this trade, and it was amazing how much I recalled from that apron review while in my seat trading this, especially once I was in the position and I was thinking about what do I want to see to get out. And what happened with apron is kind of the same thing, where it halted limit down 4 or 5 times, and then the last time it gapped way down when it opened, and then that was it. That was the bottom. And so that's what I was looking for here. And so I was able to get flat my position, somewhere in here, close to the bottom, because I remembered this pattern from the apron trade. Just to summarize, this was definitely a large opportunity, and so a play that I have edge in. So it's the perfect play to reverse engineer, pay attention to detail, visualize getting size at key inflections, and the apron review definitely helped me here. And so I expect future reviews to help me even more in the future.
Well, great. Hey, I just want to thank you for doing this. I'll say this succinctly. This is the best review we've ever done, hands down.
That's awesome.
Really appreciate it. Really clear thinking, really detailed review. So appreciate it.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.